Hi, this is Joe Rabil. Wanted to check back and give another example of this multiple time frame analysis that we've been talking about. I'm starting with the chart of Palo Alto networks on a monthly chart. I don't really, I don't recommend trading off of a monthly chart, but I think it can give a tremendous amount of insight, even for, certainly trades off of a daily time frame, but it can be very useful even on shorter term trades. But the focus here is I want to. I know I have in almost all my videos I showed charts with an 18 and a 40 on them. I have purposely taken the 40 MA off of this chart because I want to show you how in my book, Invest Like a Pro, I discuss how I do use the 1840 as a buddy system, but at the same time, the driver of the approach is the 18 MA in each time frame. And I want to point this out and give a specific example as to why I look at things this way. The 40 has a little bit of a lag to it. It's very, very helpful, and it helps to really define the trend. But at the same time, if you're waiting for complete confirmation from the 40, in a lot of cases, you're going to miss way too many trades. So I think if you focus your efforts on the 18 MA, you're going to be much better off. So we're starting here on a monthly chart. I've actually circled the area that I want to spend time on here. I'm going to move this chart over and zero in a little bit. So where I've circled here, what I like about this program is if I move this around or whatever, it's going to change on this time frame. So if, in other words, if I make this bigger, you'll see that moves as well. So I've got a weekly on the right and a monthly on the left. I'm focusing in on this specific area. And what I'm saying here is, okay, you get this really violent bar, but it is finding support at the 18 month. And notice what happens in the MACD. Now, this takes a few months after. This is why I wouldn't necessarily be interested in buying, even on the weekly, as a big bar approaches the 18 for a couple of reasons. That's just too violent. Most of the times when you get a big violent bar like that, you're going to test it a few times. And then secondly, I don't really have any kind of a signal on the monthly MACD. So if you notice here, I had a pinch play that ended up making a really nice move on the monthly. And then you came down, and then this drop, you end up breaking the MACD line. But notice what happens. I'm making let me just draw this in. I'm making a higher low on the price action. And the MACD line, the red line here, is actually making a lower low. So I've got reverse divergence. Again, go through my book. I give a lot of examples on this. I've got some videos that are going to come out on reverse divergence as well. But more importantly, that I don't really want to focus my time on that and explaining that. I just want to say I've got a setup developing on the monthly time frame. I like the fact that the 18 has been rising throughout. Even though this was a kind of a hard drop into it, I still have a rising 18. So I'm now going to go and look at the weekly. And if you notice, the moment this drops down, it breaks the 18, and the 18 on the weekly is declining. And it's declining until this point at the beginning of October. So if I wanted to, I'm going to actually switch this chart to a weekly, and I'll explain that. I'm going to switch this one to a daily, and I'm going to show you. So look at the wide circumference of the circle on a daily chart, which is the time frame that I actually want to do a trade on. And if I look at this on the weekly, it's still declining, but at this point here, right about at the beginning of October, I am starting to see a rising 18 week. And also I see that the MACD line is about to cross. It's showing, a little bit of divergence, not a whole lot, but I'm getting a little bit of a turn developing. So I'm going to actually shrink this circle down because I'm going from the monthly, which is the wide angle lens, and I'm trying to zero in and zoom in more and more with each time frame to try and find a specific point where the monthly, the weekly, and the daily are all in alignment at the same time. And if I have that and I get a trigger mechanism, I want to get in. So I've just shrunk this down a little bit. I'm going to shrink it even more because the reality is prior to October, I'm probably not all that interested in going down to the daily yet. But now on this time frame, let me switch this. Now look at the size of the circle. Circle's getting smaller. And I've gotten down to the daily. I see that what takes place on the daily in this time frame, now I've switched over. I've crossed over the 18 and I've actually created my first little pinch play. Now, it's still on the early side because you don't have a convincing move above the 18 yet on the weekly chart. This would have been an aggressive play. I mean, it was above the monthly 18, above the 18 week MA, and it was back up, holding the 18-day MA. But to me, that's a little premature, especially because you don't have a crossover taking place quite yet. So I'd probably wait for the second pinch play. I'm going to zero in a little bit more. And in fact, I'm not going to say I probably would wait. I would say I actually did wait because this was a trade I actually did one of the accounts that I manage. So if you look at this, the week, so we started with the monthly, right? And we were looking at this wide zone, as this entire area, which is 4 or 5 months. We switched down to the weekly, and the weekly helped us prevent getting in too early or waiting or getting stopped out. If you would have bought this anywhere in here and it rallied up, you'd have probably been stopped out on this drop here. And then finally, you get back above the 18 week. Now I'm on the daily. I'm back above the 18 day, and the daily actually pulls a little pinch play. I get a lower high, and look at this nice pinch developing after the first cross of the zero line. And that play right there, you really somewhere in the 214, 215 area really want to be getting long. This is where I've got all 3 time frames. I normally talk about 2 time frames, but in reality, you can use 3 time frames for this because the really high time frame is just giving you the bias. The monthly chart's saying, you know what? The bias is to the upside. I can now go down to the weekly and get a little bit tighter time frame of really where do I want to focus in. And then on the daily chart, you get the final piece of the puzzle in place, and you get the nice, actually 2 different triggers, but the second one is really the one where you have confirmation on all 3 time frames at that point. And obviously this has made a pretty nice run from there. So I just wanted to give an example. I talk about this in the book as to how the 18 is the driver in this approach for me. And so I wanted to explain without the use of the 40, how I'm looking at this. The 40 does not hurt. I mean, you can throw a 40 on here and it is going to help you in a lot of cases. It's going to tell you when you have a really strong trend. But if you focus on the 18, I think you're going to be a lot better off.